I've just had a look at your numbers. Clearly, there has been a COVID effect. Can you just walk me through what impact the COVID-19 effect has had in terms of this quarter's numbers?
Sure, Guy, with pleasure. If you look at this period, which has indeed been impacted by the COVID environment, BNP Paribas has basically been on the vanguard to adapting itself very rapidly to stay with its clients. To give you a quick example, we've been able to move 130,000 of our employees into remote labor, so basically working from home in the environment. And this allowed that we were able to continue to serve our clients in a safe way. For example, we have 115 billion euros in financing going into the market that we set up for our clients. So that is intrinsically what we did. So we adapted to be able to continue to serve. So if we look at the first quarter started off well. We were having a growth in activity. However, there was this effect towards the end of March. And what did it mean? It basically meant that there were three exceptional elements impacting the results. The first one is, of course, the cost of risk. So the cost of risk stepped up by like 500 million. The second effect is a one-off effect related to accounting in our insurance, where we have portfolios, investment portfolios, which are going to the P&L, which are linked to what the markets do. They went down. So this is a negative effect, but which normally would taper back up when the market returns. And the third impact of the COVID-19 is when it comes to the decisions that have been taken by authorities to strongly recommend that dividends wouldn't be paid, which had an impact on our equity and derivatives activity. So those are the impacts that weighed a bit one-off on the results. So if we look at the result itself, the top line clocked in at around 11 billion euros, which was down some 2% versus last year. However, if we would look through those exceptional events, it would be up 2.8%. Costs were down as we planned it, so reducing costs 3.5%. So if you look at the bottom line, it came in at 1.3 billion, down some 30% versus last year. But again, if you would look through those exceptional elements related to COVID, it would be up 6.7%, as our normal procedure would be. And the last thing, all this synthesizes the strength of the balance sheet, because our common equity Tier 1, 12%, in line and well above what the supervisor demands from BNP Paribas. And on top of that, a liquidity reserve of more than 339 billion euros. So all in all, the balance sheet strong, and we'll see how we sail forward.
Can I just sort of dig into some of that in a little bit more detail? The third one-off item you mentioned there was a hit to your equity and derivatives division, resulting as a result from basically a change in regulations regarding dividends. Mm-hmm. Can you just give me a little bit more detail about exactly what happened there? This is an area that you guys normally specialize in. It's a key skill set. What happened?
Yeah, so as a reminder, our equity and prime services activity doesn't have the typical cash activities. The cash activities in equities is done by Exane BNP Paribas. Yeah, so our activity is mainly focused on the derivatives and structuring kind of products. And one of them is therefore, as I said, related to the dividends. And when there was a decision at the end of the quarter by the authorities, or a strong recommendation for dividends not to be paid out, those positionings that we had basically reduced in value because of that change in recommendation, which was basically followed by the majority, followed by the majority of the institutions.
Okay, but a one-off item. Let's talk about what could be a recurring item, which could be a rise in non-performing loans. How much are you provisioning now? How much do you expect to provision in the future? Why do you think we are seeing European banks provisioning less than we're seeing over in the United States?
Yeah, so we basically stepped up our provisioning with 500 million. And the amount, you cannot necessarily compare one bank to another one, because it depends on where are your exposures. Are they in Europe, therefore guaranteed by the states, or are they in other countries where there is no such thing? Then on top of that is it more kind of non-guaranteed personal finance kind of loans, or is it more like house lending or corporate lending that is going on? So comparing one bank to another is not that straightforward. So for us, the impact is basically judged given the diversity of activities that we have. So we have individual, corporate, and institutionals, and we are very, very diversified. So there is not one thing which is focused. And if you look, for example, in personal finance, we have been focusing since a couple of years on collateralized products. So instead of just having credit card funding, we do more home improvement kind of funding, which is of a different nature and impact.
Do you think, when do you expect to see the peak in that? Do you think we're going to have to see further provisioning? We're getting into kind of macroeconomic territory here, but just kind of give me a sense of what you think the trajectory of the non-performing loan curve is going to look like.
If you look at it, the impact that we see now is basically the confinement that has been happening. That is basically what is weighing. And so the question is, how will we get out of this phase? So like, for example, in France, this will start as of next week. So a lot will depend on how this deconfinement will work. Yeah, this will be phased. It will be tapering up back towards normal by the end of the year. So it will all depend on how this one goes. And so it's just a tad too early to say what the impacts will be. So it will really depend on the speed at which this recovery happens, and if there is not a next phase or a next step in a crisis related to that or other. So it's just a tad too early to say.
But nevertheless, it looks like any reopening is going to be slow and gradual and is likely to have lasting effects. We're starting to see governments around Europe publishing the guidelines for corporations as they bring workers back into their facilities. Given that, it is likely that economies are going to be operating at below potential, and in particular smaller companies are going to find it harder to deal with those kinds of requirements. Do you expect, therefore, some of the SMEs to suffer more as we go through this, that actually loan loss provisioning against those SMEs will have to rise even further?
It depends a bit on sector. The way we look at it is we look at the counterparties as they were in February. Yeah, if they were good in February, we continue to see how they will phase into this period where the COVID is active. And so normally in the majority of European countries, there are guarantees from the state that should normally get them through that period. And then the question is, how will they sail through the period thereafter? Will they pick up back to normal? Will they pick up less? Will they pick up more? So that is the uncertainty that we'll have to see. But in our view, that pickup of the economy back to a normalization in the economy will be happening at the best by the end of the year. And therefore, a return in GDP to normal will not be before 2022.
Madame Lagarde is making a lot of very cheap money available via the TLTRO system. What are your expectations about how that system is going to work, how you're going to access it, and therefore play a role in the kind of transmission mechanism which the ECB is so keen to make sure works at this point?
Yeah. Indeed, what you see is there are a lot of steps being taken by the supervisors to ensure that banks can play their role. Because back into the crisis of 2008, banks were a bit at the heart of the crisis, whereas now banks are at the heart of the solution. And that means that banks shouldn't be suffocated. So they should be able to transmit the money and basically be able to play their role. And that is what you see which is taking place. There are some changes in the requirements so that banks can play their role, and they're being taken so that banks can really pass on the money into the economy. So you see that all those steps are being taken for banks to play that supporting role to get out of this pandemic.
What is your view of the TLTRO system, though? It is being offered, the new round that was announced only a few days back is being offered, obviously at a significant discount. The rates are very cheap. The money is kind of incredibly generous at the price that it's being offered at. What is your perspective on what role BNP is going to be playing?
As said, I mean, we basically play a role in the economy. If you look at our loans, they really stepped up. We really took a large step up in March to help all of our customers. So that is what we will continue to do. And what we see with the ECB is that they ironed out elements which could suffocate the banks of doing this. So for us, we're really there to support Europe in this rebound.
You talked at the beginning about putting people to work at home. What is the long-term effect of this likely to be? You are clearly learning a great deal about how your business can operate in this dispersed environment. Ultimately, do you think, therefore, that that's going to affect the way you deal with headcounts, the way you operate people in offices or at home? Do you think, therefore, there could be a cost implication further down the road? You're not going to need as many desks in offices going forward, potentially. Do you have an idea at this stage of the order of magnitude that we could potentially be looking at in terms of the reduction?
If you wish, what we have seen with this crisis is all the elements that we have been planning for things like making sure that people can work at home, that they have the infrastructure. And what we see is that is basically working quite well. And so that is the important. So we'll have to see how that evolves. There is still an interaction needed between people. So it is basically a testing ground that we will see how to go forward.
What is the effect on cost likely going to be in terms of how you manage the French business and the Italian business, particularly at a retail level? Do you see yourself continuing to reduce costs there as aggressively as a result of what is happening here? Will this accelerate the move online? Will it reduce the number of branches available? What effect will that have in terms of the rate of change within that space?
It is just a tad too early to say. We had foreseen in the year 2020 to really grab all the impacts of the transformation plan that we launched. And so that is basically what we continue to do. And that is what we see in the reduction of our costs. How we will see going forward? Yes, maybe we will need a different setup in offices. Maybe we will need a different setup in IT infrastructure to allow staff to work. So that is just a tad too early to say, but it clearly is some experience that we have that we will investigate going forward.
Just to wrap things up, you talked about the macro effect. Do you think at this point in time that the numbers that we're seeing posted represent the lows in terms of economic activity? You talked about the effect of a second wave. The current economic story is being supported by a great deal of monetary policy and a great deal of fiscal policy. Europe clearly needs to do more. What does the French government need to do? What does Europe need to do more to better prepare itself for the kind of post-COVID-19 picture?
Well, the thing is, we now have to focus everything on getting out of this COVID-19 picture. So what I mean by that, what is very important is how is this lockdown that was installed in many of the countries, how is that now going to unfold? So that is the important thing. Can it be accompanied in the right way to really make sure that we can have a gradual pickup of economy? That is the main thing at this stage, that we have to make sure that there is a gradual pickup again into a normalization towards the end of the year.
Final quick question. There is going to be consolidation in Europe as a result of this. You have highlighted the strength of your balance sheet. What role will BNP Paribas be playing in that consolidation? And is this something you're thinking about now?
If you look at it, I mean, the times of consolidations are not at the order of the day. What is at the order of the day is to look at how we can continue with all the digitalization that we have done, how we can serve clients better, eventually get on some other products. That is the main thing that we look at, nothing else.